Hey, happy Saturday, everyone. This is Futures Brizio. It is about quarter to two on Saturday, May 18th. And just testing out some streaming software here. And so hopefully this is coming across on the channel. And hopefully this will also just be posted as a video you can go back and look at later if you're not seeing this live. Just practicing this out a little bit here, and so let's just get going. But either way, I'm just going to record this and see how it goes. All right, so the purpose of this video, guys, is just to talk a little bit more about the Heiken Ashi smoothed indicator. Okay, so I've been mentioning this the last several days, and didn't really spend a lot of time on it. I'm not going to spend a lot of time on it now, but I did want to point out a couple of things about what this is and what this is not. Okay, so that's the purpose of this video. So first of all, where do you get this indicator? Now, I did drop a link to the MQL5 website. That's basically the MetaTrader marketplace website. So if you're using MT4, MT5, you can get it there, and I'll just show you. So if you go to mql5.com, again, this is the MetaTrader marketplace, all things that are MetaTrader, and you just type in Heiken Ashi smoothed, and there are paid versions you don't need. So just click free and it'll filter it out, and these are the four that you'll find. They're essentially all the same. It's just different different developers. This is the one that I used. Okay, this one looks pretty much exactly the same. This one adds some kind of an alarm feature, so when it changes color, you'll get some kind of a notification on your platform. I don't really think that's too helpful, but because you could get a notification, and it's all it is a little pullback or something. But whatever, that's an option. And then this one here looks the same. It's just that it's in Spanish, so it looks like it's just a Spanish developer. But if you look at these, so here's the one I use. So this is for MT5, as you can see. But you can see right here, there's an MT4 version of it. So if you're using MetaTrader 4, you just click here, and this brings you over to the MT4 version, which you can see looks pretty much exactly the same. Okay. So that's where I got it from. So just so you know, and again, it's a free indicator, so no cost if you have any interest in it. Okay, so what is it exactly? Well, basically, all as it is, guys, it's not a regular Heiken Ashi candlestick type thing. It's actually, essentially, it's a moving average with Heiken Ashi candles overlaid, or look at it the opposite way. They're Heiken Ashi candles. It's a Heiken Ashi indicator in the form of a moving average. Okay, so if I open the settings on this, I'll drag this over so you can see it. You can see you have a period. Okay, so this is the same thing you would select for any moving average. Okay, 10 period, 20 period, 50 period, 100 period, 200 period, whatever. This is the moving average. Okay, period, which is 10. Okay, forget about that it says smoothing. It's a 10 period moving average. And then they give you the option about what type of moving average: simple, exponential, smooth, or linear weighted. It defaults to linear weighted, and honestly, guys, if you use linear weighted, exponential, or simple, you're not going to see a really big difference in the way they plot. The biggest difference you'll see is if you use smooth, because the smooth just does just that. I don't like the smooth because it creates too many wicks on the candles, so I don't like the smooth. I end up just choosing simple because it offsets it a little bit from the candles, from the line chart a little bit. It shifts it because there's no option in the setting here to shift it left or right, to make it easier to see the line chart underneath. So I just chose simple. But honestly, if you use exponential or linear weighted, it's going to look pretty much the same. The biggest impact you can make on this is what period you use. Okay, so obviously I have 10. And just to also prove to you that this is basically just a moving average, if I plot a regular 10 period simple moving average on my chart, it will exactly mimic the Heiken Ashi, this Heiken Ashi. Okay, you won't even see it because it'll follow this perfectly. So again, it just gets back to my point that all this indicator is a moving average with Heiken Ashi candles overlaid on it. Okay, but the purpose of it is to excuse me, not only show you general direction with the moving average, but also just try to show you kind of strength of the trend, um, when there might be a pullback, when a pullback might be over, what the momentum of that movement might be, etc., etc. Whereas, you're not going to get that in the moving average itself. Okay, so that's the advantage it has. Like regular Heiken Ashi candles, in a strong uptrend, you're going to see Heiken Ashi candles with no wicks on the bottom. You see right here how there's no wicks at the bottom of these? That indicates a stronger trend. There's always going to be wicks on top, okay, on every candle, because that's how Heiken Ashi is calculated. But don't mistake that as like the type of wicks you'd see on regular candlesticks, okay? It's the way Heiken Ashi candles are calculated, because when one closes, the next one opens at the halfway point of the previous one, okay? And so it closes at the halfway point. So if you look at the way these candles line up, that's how Heiken Ashi works, okay? Now you can see as price goes up here, and then it turns color. This is obviously just a little pullback in the trend. You can see as you go up here, the candles get smaller and smaller, and then you have this little one here with a wick at the top and the bottom. And then the candles turn bearish. Small candles. Obviously, this is not a reversal. It's just a little downtrend correction in this uptrend. And then you can see, we have this indecision time where you have the bullish candles, but you notice how big the wicks are. Then you have bear candles with wicks on both sides. So this is obviously a consolidation, and that's what is nice about this. It shows you kind of those consolidation areas. And this is where your settings will become important, because the longer you make the period setting, the smoother this will be, okay? So if I extended this and made this, 10 period turned into a 50, well, first of all, you're going to see a much different picture here. You probably would see still blue candles all through here, because it's averaging out a lot longer period of time. And so, but the shorter you make the period, the more noisy it's going to be. So like any moving average and like really any indicator, the shorter you set the time period, yes, the more detail you get, but the more noise you're going to get. So I think this thing defaults to a 7-period linear weighted when you put it on your chart, if I remember. So I didn't change that much. I made it a 10-period simple, but you could leave it as a 7-period linear weight. It's not going to be all that much different. But you have to play around with it, and you may have to change it based on what asset you're trading too. So unfortunately, whenever you have an indicator that you can adjust settings, it's hardly going to be, a set and forget type thing. Okay. All right. So, and then you can see, here as the trend starts to resume, you start getting flat bottom candles again. But then, right in here, we still have a lot of indecision. You notice, even though price is going up here, there's still a lot of indecision. And that you can kind of see that in the price action. Notice how choppy it is. Yes, it's going up, but it's not really making a lot of progress. It's just kind of chopping around. Now, it's not to say you couldn't resume if you were, like, say, looking for a long entry here, that as soon as you get a flat bottom candle, bullish candle, you go long, that would have been fine, actually. You could have taken anywhere in here, put your stop probably below, like, the swing of the line chart, probably down here. Wherever the wick is, maybe put on your candlestick chart and place your stop below the wick of this swing low right here. All right, and obviously you can also just put your cursor over that. It'll tell you where the low is at 2307, so you put your stop, below 2307, or at least at 2307. Okay, and then you can see eventually the price started getting stronger again, and then started heading back up again. Okay, and again, as long as you're seeing these, then and you start getting flat bottom candles. And so flat bottom candles, no wick, and the bigger the bodies, the more impulsive the price move is. Okay. Bearish candles are going to be just the opposite. There's not going to be any wicks at the top when it's a strong bearish momentum. You can see these, flat bottom tops, wicks at the bottom. We get down to the bottom here, right at this point where you see these change over to these little doji candle. This is, maybe suggesting that you're entering the end of this corrective move. And then, again, this is what the regular moving average won't show you. Okay, so that's where this can help you. Now, in addition to that, I have 2 other regular moving averages on here. This is a 21-period exponential, and this is a 100-period exponential as well. All right, and again, these are just helping for trends. Now, I only have the the 100 period showing on the 30-minute chart and higher. I don't want to see this on a shorter time frame because I don't care about it on the shorter time frame. I'm just using it to help me with the overall larger trend on the higher time frame. Again, as I stated in my other videos last couple of days, I like to use the 30-minute to the 1 hour chart for getting kind of my trend bias for day trading. And so this is showing, but you can see if I go down to a 5-minute, my chart is not showing that at all. Okay, it's only showing that on the higher time frame. And it's the same thing for this 21 period as well. Okay, I'm only showing it on the 30-minute and higher. I'm just looking at my setting. Okay, so again, I go to the 5-minute. The only thing I'm seeing on the 5 are the Heiken Ashi candles and the line chart. Okay, and again, the other, like I said, guys, you really can't. Well, I mean, it's up to you, what you want to do, but I wouldn't want to use like the regular candlestick chart overly, because you see what happens if I turn on the regular candlesticks instead of just the line chart. You can see it's just too many colors to look at, and I mean, it's just, even if you set the regular candles to 2 completely different colors, it still, I think, would be too many shapes and figures to look at. That's why the line chart just gives you a nice clean look at what trend is doing. Yes, obviously the line chart is not showing you the highs and lows of any particular candle, right? It's only showing you the closing price. So you're missing the wick picture here, but if you need to see a wick, to set like I said, a stop loss or a take profit area or a structure level, you can just temporarily turn on your candlesticks, look for your wicks, and then just go back to the line chart. Okay, but I think having this Heiken Ashi indicator and the candlesticks on the same chart is not good. So it's just too much to look at. Okay, so again, guys, what I'm doing here on a daily basis is, again, depending what asset I'm looking at, come to the charts, 7-8 o'clock New York time, and I'm just kind of saying, okay, where are we in the trend? So that's the blue 100 period. Obviously this market's in an uptrend, so that's all I really care about. And then I'm going up here to the 21 period and the Heiken Ashi indicator in the line chart, and I'm saying, okay, what is price doing for this particular session? Are we continuing the bull trend, or are we in a corrective, or are we in a sideways? And I'll base my trading decisions on that asset for the day based on that. Okay, now obviously you kind of have to look at the time of day when you're back testing this. So if I come to the charts at like right here, this right here is 7 a.m. my time, this little blue doji Heiken Ashi candle, this is 7 a.m. so this is natural gas. This is about what time between here and here I'd start looking for entry. And so I would come to the chart here and say, okay, well, we're in an uptrend. We've had this we have 21 period moving average, kind of trading lower overnight, and then right about here we start to break above. So a good entry point, obviously you could take this one right here. As soon as you see a blue candle, you could just go long right there, put your stop below this swing, or below the 100 period moving average, and that would actually be a pretty low risk entry. It might not be a high percentage win entry because you don't know this, this correction could continue and you could get stopped out here, but it's a low risk entry. Or if you wanted to wait for a little more confirmation, but it would potentially extend your stop loss, is to say, okay, well, I want to see flat bottom Heiken Ashi candle, and I want to see one close above the 21 period. So that would have happened, basically right here at this candle, this one right here. Okay, so then you could enter right here, again, put your stop here, and then obviously this would have been a great trade. So that's an example of just, what is it doing coming into the session, after the volume starts to pick up. And again, that's between 7 a.m., 7 to 9 a.m. on like gold, natural gas, copper, and then after most days after about 9:30 a.m. for the S&P and the NASDAQ, okay? Since those are, most of the volume on those comes in at the North American session, which is at 9:30 a.m. But these assets, these more commodity assets, can have a lot more volume early on in the session. All right, so that's how I use this. So again, 30-minute to 1 hour chart. I'm just looking at, I'm looking at the 21 and the 100 period just for trend direction, where are we kind of looking for the day, all right, and what's the what are these Heiken Ashi candles doing. And then once I kind of have a bias, if I have a bias for that day, I might not. It could be in a sideways market for the day, like I don't know, if we look over here, let's just see, because I don't know what time this is. So like right here, this is 7 a.m. right here. Well, coming into the day right here, all right, yes, we're above the 100 period, but you can see we're below the 21 period. The Heiken Ashi candles are red. All right, so obviously in hindsight, we know this eventually went up, but you can see what happened here, right? It did start to go up again, but look at these Heiken Ashi candles, all indecision candles. All of them have big wicks. There's just no price momentum here. Now, yes, you could have gone long, say, right here, put your stop down here. You would have been in drawdown or break even for 514 well, honestly, you would have been in drawdown for about 3.5 days. Well, actually, no, not 3.5 days, excuse me. About a day, day and a half, you would have just had this thing chop around, okay? All right, and assuming you had your stop loss in a good spot, it would have been fine. I mean, but it didn't make any progress until finally over here. And that's being shown by these candles, right? This is, weak price momentum, all these wicks on both sides, and then it turns red again, and then it bottoms out here, it starts to go up, bottoms out again. So again, you could have gone long anywhere in here. You started to have little flat bottom candles right here. So maybe you could have gone long here, put your stop down here, then you would have had a much shorter drawdown period before price finally got going. But again, it didn't really get going, honestly, until over here. But you could have entered here. You just have to be willing to hold on to it. But again, it just shows you that price momentum, weakness or strength that just the moving average, if you just put a 10 period moving average on here, that you wouldn't see. So again, I'm using the 100 period just for overall trend, just in general, and then I'm using the Heiken Ashi smooth and the 21 period to kind of gauge, what's the momentum and potential trade opportunity coming into the session. And then if I have a bias on that and it looks like it's clear what I think it's going to do, then I'll drop down to a 5-minute chart, maybe even a 1-minute chart, but probably about a 5-minute chart, and look for either take an entry straight away if there's a bull candle, if I'm looking for a bullish entry, or I'll go down to the 5 and I'll wait for, fine tune an entry, maybe wait for another little pullback on the 5-minute and then enter on a move back up. But just depends how aggressive you want to be. But that's how I kind of use this. So again, the Heiken Ashi smooth is a moving average with Heiken Ashi candles overlaid on top of it. Okay, so I don't want you to think it's anything special, and it is different than regular Heiken Ashi candles. Okay, if I put regular Heiken Ashi candles on here, right here, I don't know what colors I have set, but let's see if we can overlay this. Okay, so there's your regular Heiken Ashi candles, and you can see there's still quite a bit of noise on these Heiken Ashi candles. You can see like this little move up. You can see there's a lot of noise here, right? Red, blue, red, red. Whereas the smooth candles just are telling you, look, yes, there's some indecision here, but we're still trending up, right? And this is why I prefer the smooth version, because it does that. It smooths it out. Now the regular Heiken Ashi candles will follow the line chart more closely. You can see the line chart pretty much follows exactly what the Heiken Ashi candles, because the Heiken Ashi candles are much more closely related to real candles and underlying price than the smooth indicator is, okay? Because the smooth indicator, again, is basically just a moving average, okay? But this is why I prefer the smooth indicator over regular Heiken Ashi candles, okay? So I need to take this off my chart. I'll just do it the regular way. All right, so I just wanted to show you kind of the difference between the Heiken Ashi smooth and a regular Heiken Ashi chart. And regular Heiken Ashi is great too, but I just find this to be even better. And again, like anything else, guys, with moving average settings, which again, that's what this is. It's a moving average essentially. The longer you make the period, the more it's going to smooth it out. and the less false signals and signals in general that you'll get, but you're also going to be very, very delayed in the signals, and that could be really detrimental because, if you're in a profitable trade, by the time the indicator reacts, let's say price begins to reverse or has a deep pullback, if you're only following the indicator, by the time the indicator reacts to it, you could have already been in loss or given back all your profits. But then again, if you make the setting too short, you're going to get lots of signals, and a lot of them are going to be false signals. And unless you're tuned in enough to read the price action and the other things that you should be looking at besides the indicator, and just don't follow the indicator blindly, you'll end up entering and exiting constantly. You'll exit winning trades too soon. You'll jump into new trades too soon, or when there really isn't a setup because you're getting some little false signal. So that's why there's no perfect setting. There's no perfect indicator. I just find for the time frames and the time I like to hold these trades, I've just kind of found that the 10 period Heiken Ashi smooth is perfect. Then I use the 21 period as a little bit extra confirmation going into the day, and the only purpose of this 100 period is just to give me an idea where the overall trend is. Okay, and obviously I can see that it's bullish. I don't necessarily even need this indicator, but when it pulls back into it, if I had a deep retracement and price ends up coming down below this 100 period, regardless whether I think it's still bullish or not, that's going to give me pause that maybe I'm not going to enter any long positions at that point, because we've at least have a major pullback and maybe even a reversal, and I'm going to just wait and see for price to get back above the 100 period or whether it's going to start a new downtrend. So again, the 100 period is just for general overall quick view. It should be very obvious. If it's not obvious, then the market's consolidating. So if you see this moving average like right here, how it's cutting through price. So if this went on for an extended period of time where the 100 period is just kind of moving sideways and the price is just kind of going up and down through it, that's a consolidating market. And I'm just going to leave that alone until it kind of reestablishes a trend one way or another. This was one of those instances, but it was just very short-lived, down, up, down, and then the uptrend continued. So, through here, fine, it's below. I'm not going to deal with it, right? And then, once it comes back up again, the line chart breaks back through, the Heiken Ashi candles break back through, and then right here, the 21 period price ends up painting on top of the 21 period, then this is telling you, okay, the uptrend is starting to resume, basically right in here. Okay, so you just kind of use all those confluences together. And again, I'm looking at the 30-minute to 1 hour chart, and then if I need to, I'll go down to a short time frame to fine tune an entry. Like, this is a perfect spot to enter on the 5-minute. If I look at this area on the 30-minute, and I don't know where that will come in, right here. Here's that area I just showed you on the 5-minute. Well, on the 30-minute, there's no entry here, right? You'd be looking at this and like, well, do I want to jump in right here? Like, yeah, price is going up, but is this going to give me a terrible fill because I'm buying, price has already started moving and I'm just going to jump in here? Well, I don't know. But if I go down to a 5-minute and I'm like, oh, look at this area on the 5-minute. This is little pullback you can't see on the 30-minute, but you can see it perfectly on the 5-minute. Great. Then you wait for this pullback to end. You start to get flat bottom Heiken Ashi again right here. You enter, anywhere right in here. Put your stop loss down here, and then you would have, had this all going right here. All right. You could have avoided all this, wicks, bearish candles, wicks on these two bullish candles. Price goes down again, wick, and then bang right here. You can see the line chart starting to move higher. You can see you have flat bottom bull candles. This is your place to enter, basically, anywhere right in here. You can start to enter again. Okay, perfect entry. Stop loss below the swing here. There you go. Now, I don't know what time of day this was. Yeah, this was during the North American session. This is about 3.5 hours in. It's around noon time. So, and yeah, this was Friday. A little unusual to see that kind of price action on a Friday afternoon, but we did have it. And there's, I didn't take this because I wasn't looking for any new entries afternoon on a Friday. But you know, if you had taken this, this was a good little trade heading into the end of the day, and this went right up until 1900 hours. So this is around like 3:30 in the afternoon, and then finally you can see it, you know, it dried up, started getting little small candles, and then doji, and then red, and this would have been your exit right here, and that's it for the day. So then the market closed. All right, so that's how I use this, guys, and that's the advantage of the Heiken Ashi Smooth. It's don't think again it's any magical indicator. It's just another way to view price momentum, and it just takes the, you know, the nice things about moving averages and adds a more visual component to it to kind of see through color and, you know, bodies, candle bodies and wicks, to visualize momentum better than just the moving average itself. But again, price is always king, which is why I have the line chart on here. All right, because this is the actual underlying price action going on here. And again, if I need to like to see wicks, then I can temporarily turn on my candlestick chart just to see where the wicks are. If I need to place stop loss orders, or, you know, take profit orders or structure levels, I'll turn on the candlesticks temporarily, but then I'll go right back to the line chart once I do that, just to quiet down the chart. Okay, so again, guys, you know, I have that on all these assets, and you know, it just really kind of depends. Here's an example of the 100 period, and, you know, sideways right here. You can see price kind of turned sideways here, and we had this little chop period here where price came down, went up, back through. You know, when you start seeing the moving average cutting through price, this is suggestive of consolidating markets. Okay, and you can see everything breaks through. All right, and then we chop around, we come up, but then price very quickly pulls back, and the uptrend continues right here. All right, and then, you know, price comes up, breaks back through the 100 period, start to have bullish Heiken Ashi. We start to have the 21 period, turns back higher. So, you know, basically anywhere from probably, you know, if you're following the moving averages, probably from about right here would be your re-entry point. All right, and then price continuing on up. Okay, and so that's what I mean about consolidating markets, and just, you know, kind of letting those shake out before you make any decision about, you know, what direction you want to trade in. And this is a 30-minute chart. If I go to the 1 hour chart right here, you can see the moving average is still well underneath here. So if I see this on the 30-minute chart, I see this cutting through, I'll go to the hourly chart. If the hourly chart is telling me, hey, it's still bullish, then fine, I'll still look for bullish entries, but I'm still going to wait for it to really, you know, become more clear. If on the hourly chart the 100 period is still chopping through here, then that's a market I'll just kind of put aside until it straightens out like it did down here. See, we had a longer consolidating period here. Right, here's the 100 period moving sideways, price went through, right, back up, back down, back up, back down. All right, not that you couldn't have traded this, but this is still really consolidation. And it wasn't until we got here, cleared these highs right here, all right, pulled back, and then went where we finally, you know, confirmed the bullish price action back over here again. You certainly could have entered. This is a low risk entry right here, but you stop down here. All right, potentially a lower win rate, but a lower risk as well. So you just have to kind of make those judgment calls. All right, but this is the, you know, you don't want to trade any kind of momentum strategy in a sideways market. You'll get chopped up. Okay, you just will. And moving averages can show you that pretty easily. So, yeah, so that's what I mainly wanted to show you guys. I wanted to spend a little bit more time discussing the Heiken Ashi Smooth indicator and how you can use it. Again, no magic formula. And again, depending what asset you're trading and what time frames you like to use, you may have to adjust the setting. But I would keep it to a lower number. Again, I have it set to 10, but I would definitely keep it to a lower number. Again, if you lengthen it out, you'll smooth it out, you'll get less, you know, change of colors, but you're potentially giving yourself very late entries and exits the longer you go out. And again, it's a compromise, right? Because like I said, the shorter you make it, the noisier it'll make it, and more potential fault signals. It'll be more reactive. It'll give you information a lot quicker, but it's also potentially going to give you more false signals as well. So it's always something you have to balance when you look at these things with any type of adjustable indicator. All right, but I do feel it's pretty good, and I'm a kind of a visual person, and I like this better than just using straight candlesticks because it shows you momentum, in the form of a moving average, which you're not going to get with candlesticks, and you're not going to get with regular moving averages. So, all right, guys. So I will leave it there, and I hope everybody has a great weekend. And if you have any questions or comments, please make sure you leave them down below. Smash that like button. Subscribe to the channel if you're just finding it for the first time. And I hope everybody has a great weekend, and we'll talk to you next week. Be back with some new setups and price action. All right. Talk to you soon, guys.